Okay, good morning, everybody. Welcome to our Thursday Q&A session. I've started the recording. As always, we try and provide you with information as accurate as possible, but we cannot guarantee it. And I mean, stock trading is difficult. You have to evaluate your own situation before you jump in and dabble in trading stocks. We all know that. So just that part on the disclaimer. Another reminder that this is being recorded for the purpose of posting it on our YouTube channel, so that you can watch it at your leisure. Today, we're going to be talking about medicine and specifically Aspen Pharmaceuticals. Ross from Coller is our analyst who deals with that part of the business. And we'd like to know, Ross, is there still money to be made in medicine, mate? You can take it away.
Morning, guys. Can you hear me?
Yeah, perfect. You can go.
Awesome. Good morning, everyone. Thanks for joining me. My name is Ross from Coller. I cover the healthcare and consumer staples, and this morning we'll be talking about Aspen. So just a quick touch up on what's happening in Aspen and in particular the market environment. It's been quite a tough year for healthcare companies. Most have lagged the market outside of your obesity and diabetes drug makers. So there's big returns coming from those guys, but from everyone else, it's been quite a tough time. It is a highly regulated industry in the healthcare and hospital space, for obvious reasons. Drugs take a long time to go through the pipeline and get to the market. And in South Africa, we have another additional problem with a thing called single exit pricing, which is essentially the government puts a pricing cap on any scheduled drugs. That pricing cap changes year to year, but essentially it's a mixture of currency rates of USD to or ZAR to USD and ZAR to the euro, as well as inflation. So it normally sits at around 5%, and historically it has lagged inflation, which is something that drug makers like Aspen and Adcock Ingram sort of struggle with, because they struggle to pass on the pricing to the consumer. As far as Aspen goes, we do have a limited upside of about 12%. That was as of Monday, which when the stock price was at about 168 Rand. It's rallied a bit in the last couple of days, so that's probably a little bit less. But at the moment, it's sort of trading in line with its historical PE of the last couple of years. Just touch on the results, which were the end of June. They came out in August. Revenue was up, which was largely expected, but it was mainly due to currency movements between the ZAR and the USD and the euro. And the headline earnings decreased mainly as a result of currency movements. The big positive, the stock is up about 30% year to date, and that's on the back of the announcement that they are upgrading their sterile capacity or vacant sterile capacity. So they've basically got capacity to make more, so they just need to sign contracts, which I'll touch on now. But that was upgraded from 3 to 5 billion, so 3 to 8 billion, an increase of 5 billion, which is quite material when you consider they do about 40 billion a year. We do have a hold for various reasons. There are risks associated with this company, which I will touch on. And it does come down to if they can reach their guidance of what they are expecting at the end of 2026. And if they manage to do that, we might see a re-rating of the multiple. Just to touch on what Aspen does, or how they report their business. It's in 3 segments. It's in the sterile, regional brands, and manufacturing, of which your regional brands is about 50%, and the other 2 contribute fairly equally, 26 and 28%. And essentially, sterile, they provide sterile medicines to hospitals, mainly anesthetics and thrombosis therapies. Your regional brands will be anything over the counter, your scheduled drugs, and then branded and generic prescription drugs and off-patent generics that they acquire. And then your manufacturing is where we're going to see the growth, hopefully. This will be in your steriles and your active pharmaceutical ingredients, whereby they manufacture those and then export them or use them locally in their own products. But that's where we might see the capacity and the growth drivers. Just to show you, I'll just go over this quickly. As I've just mentioned, it's basically half and quarter. But you can see there on the right that the gross profit from the manufacturing has struggled, and that's due to them having all the excess capacity and the loss of the COVID vaccine, which was contributing to their margins. Just to give a quick recap on where Aspen has come from. For the last 10 years, they made a series of acquisitions, mainly in Australia and with regards to their nutritional business, infant nutrition. They paid a lot of money for these. They loaded up on their debts, and as you can see on the left there, their net debt to EBITDA was approaching 5, which is a bit of a flag. And then over the last couple of years, you can see that they've reduced their debt quite nicely. And now they're trading at just under 2 times net debt to EBITDA, which is in a comfortable range. It does give them opportunities to make acquisitions, but it needs to be, we need to take that with caution, as previously they have paid high multiples for their acquisitions. Just to touch on what the sterile capacity is, essentially they've got two main manufacturing plants in Port Elizabeth and in France. And we've taken this on management's guidance and a look at the report produced by Standard Bank. And essentially over the next 2 to 3 years, all of these should come online, which will give them the production capability of about 900 to 1.1 million or 1.1 billion doses, of which they've signed contracts up until the end of 2025 for 4 billion of those. So if we go by management's guidance, next year we should have 2 billion, the year after 4 billion, and the year after 8 billion. This will come in the mixture of the French and our Port Elizabeth facility, and that leaves about half for 2026. Those contracts haven't yet been filled, and there's been no information yet, but that is obviously clearly in management's plans going forward. The issue with these contracts is they're highly dependable on the other countries and companies. They've already signed deals with Novo Nordisk and Eli Lilly, which are the two companies associated with the obesity and diabetes drugs. And these two companies are facing severe supply constraints, so they need extra capacity. But they have stated that they're probably going to go forward with internalizing that manufacturing process. So there'll be unlikely to be any more contracts coming from those two guys. The other issue is the tech to transfer and produce these drugs for these other companies can take a very long lead time, anywhere from 6 to 30 months. So if we're working on a 3-year outlook to the end of 2026, that almost takes the entire tech transfer, which is quite an issue. Management also seems to have quite a high guidance for the EBITDA for these drugs, sitting at 70%, where the group gross profit margins are sitting at about 45%. So it does seem high, but it seems like they're already put in the capex. So it might just be maintenance costs that come along with that. And then the pricing issues I just discussed. I've discussed South Africa's pricing issues. Australia has even stricter pricing issues. And there are also pricing issues in China, which is quite a major risk, as they say they might expect a 500 million rand profit decline from China. So if we just look, so the chart's looking a little bit strange there. We just look at where this PE is traded in the last 5 years. You can see it sort of sits between 8 and 12 with an average of about 10, where it's sitting at the moment. It spiked in the middle of 2021 when they announced that they got some COVID contracts from Johnson & Johnson, but then the realization that the profit and the EBITDA that they were going to get from these contracts was a lot lower than the market was expecting, so it re-rated. And you can see over the last 5 years, trading in a very, very narrow range Although if we see these other contracts coming through, we might see a re-rating closer to the 12 mark. I'm not going to spend too much time on this, but this is just basically how we get to our value. It's on the back of an EBIT of at 2025 of just over 11, which takes into consideration conservative estimates based on their guidance. Management hasn't had the best track record of delivering on exactly what they're going to say, but their guidance doesn't seem too unrealistic. And if they can meet that, then we might see a lot or slightly bigger upside to what we have given them the intrinsic value at the moment, which is just under 189 Rand. I think today it's trading at about 175. So it's slightly less than the 12% that we've given them, is closer to our target price. And yeah, that's pretty much what I'll say on the valuation. And that's it from my side. I'll turn over to Shaun now for the technicals, and then any questions if anyone has anything.
Yeah, good morning, everybody. Yeah, you can see the chart there of Aspen. I took a chart this morning, so it shows the share price open higher this morning compared to yesterday's close, but it has also pulled back and trading a bit lower than is open today. So the share price is still trading above its 21-day and 40-day moving averages, as well as its 200-day moving average. So I'm calling the trend at the moment neutral or sideways in the medium term, but also still bullish in the longer term. Saying that, it is still trading about 11% lower than its high reached on for about the 10th of August. The price seems to be trading within I call it a long-term symmetrical triangle chart formation, and in the short term could break up either up or down. So should it break up above that long-term resistance trend line around about the 177.50 level, we could expect the share price to retest that resistance zone between 186 and 190. And as Ross said, now that is where we have our intrinsic value, just under 189. And as Ross also alluded to now, we still have an old recommendation. So there's still some upside if it goes up. Saying that if it breaks down and closes below that support trend line, the share price could move out of that support zone. I'll call it a support zone. That's between 166 and 170 level, and it can pull back to retest that support level at 160 level. Okay. If it breaks through that, then we're in 340 territory, but I don't think we'll go so much lower. The MACD indicator, you can see at the bottom there, it's trading just in overbought territory and just above its trigger line, so it's not giving any signals as yet. The shorter term stochastic indicator, that however is trading at what I call neutral levels, but also with a bit of a bearish bias. So it's a bit difficult at this point in time. I would rather wait for clear direction out of this triangle formation, or a breakout either above that resistance or support trend line, but also further confirmation from those technical indicators. So it's not an easy one right now. Okay, well, thanks.
Thank you very much, Shaun. Thank you very much, Ross. Interesting to look at the pharmaceuticals for a change. I mean, we've been digging into the mines and so on, and into the banks. Ross, interesting to note that on your slide where you compare them with the peers, I mean, even though there's a lot of moving parts for these guys and they've got potential to make some money and get back up to previous levels, it seems from a PE perspective that there's cheaper pharmaceutical companies to be had here.
In the form of Viatris and Bayer.
Yeah. I saw their PEs were down at 3 and so on.
Yeah, so Aspen doesn't actually have a local competitor. The closest competitor they've got is probably Adcock, which isn't an exact like for like. But the PEs of the international guys sort of trade at a bit of a discount to what Aspen trades at. If you look at our market in general, the JSE is trading on more or less a 10, which is where Aspen is at the moment. And a lot of these guys are facing, the competitors are facing declining future prospects towards the end of 2030, as a lot of these drugs come off patent. Obviously, biosimilars come into the market, and that cuts their revenue, because then they have to compete with the generics. So from an international point of view, there are cheaper plays on a like-for-like in terms of PE, but locally you don't have any other options on the JSE to invest in with Aspen, other than Adcock, which I say also has a consumer health division, which is your products you'll basically find in Discom and Clicks, and then they have a generic component as well. But nobody competes with it in terms of the manufacturing and sterile facilities that Aspen has in this country.
Thanks, Ross. That's a great insight, because I always assumed that people like Adcock and them also playing in the generic space are competitors with these guys. But from what you're telling me now, it's not really like for like, and these guys have got an advantage in that they diversified into more things than what Adcock are doing. All righty. I want to invite the audience to, if you've got any questions, you can just switch on your mic and your camera and just ask it outright, or pop it in the chat for us. I don't see any questions in the chat at the moment. I'm going to allow a minute or so for questions, and then if there are no questions, then we'll just close. Clive has made a comment. He says, thank you for the interesting presentation. He now has a bit of a detail into the company. Yeah, I feel the same, Clive. I'm definitely going to put this on my watch list and keep an eye out for Aspen. Let's see, any further questions? I don't see any further questions, so thank you very much for your insight, Ross. Thank you very much, Shaun, for helping us with the technicals. Yeah, hopefully it breaks your ascending triangle on the top side, Shaun. Get back up to $200. But yeah, we'll keep our eyes on it. And then
there is a question. I want to know who's next week. What companies next week?
Next week will be PPC. PPC, and the week after Naspers. All right. So next week we'll be talking cement. This week we spoke about the stuff that goes inside the veins. Yeah, we'll catch you guys next week. Thank you very much for joining us. And once again, Ross, thanks for the insight. It's magic. Thank you. Cheers. Have a good Thursday, guys. Bye-bye.
Thanks, guys.